Jatin, are we live?
Ashna?
Good evening, everyone. We're honored to welcome all the dignitaries, academicians, industry professionals, and our dear students to the Pan-India webinar, COVID-19 and its impact on capital market, organized by the Department of Banking and Insurance of Srimati Mithibai Motiram Kundani College of Commerce and Economics in association with the Board of Industry Academia Partnerships. We sincerely thank all the participants for such an overwhelming response. We have received registration even from Tier 2 and Tier 3 cities. We have with us this morning Shri TVVPS Chakravati, General Manager, Securities and Exchange Board of India, Shri Khaja Mohideen, Assistant Vice President, Metropolitan Stock Exchange of India. Let us begin our session on an auspicious note with the Saraswati Vandana, offering our respect and seeking guidance from the Goddess of Knowledge.
पद्मासना या ब्रह्माच्युत शङ्कर प्रभृतिभिः देवैः सदा वन्दिता सा मां पातु सरस्वती भगवती निःशेषजाड्यापहा.
May I now request Dr. Kishore Pishori, Principal, MMK College, to give opening remarks.
Thank you, Asana. At the outset, a very good morning to all of you. And I would like to especially thank the two learned faculties, Mr. Chakravati from SEBI and Mr. Khaja from Metropolitan Stock Exchange, who, despite lockdown, have accepted our invitation to guide the students on securities market. Friends, I would like to wonder whether it's a lockdown or we are unlocking our strengths. And at the same time, I would like to congratulate Ashish Jani, the dynamic coordinator of banking and insurance of our college. Our college is a Sindhi linguistic minority college located in heart of Mumbai, that is Bandra. It deals in commerce, economics, and it has got all the streams: BMS, BBI, BAF, Bachelor in Financial Markets, and of course, Bachelor in Mass Media. Friends, Ashish has been quite a very, I would say, inspirational in motivating the students to unlock its knowledges in banking and insurance. In this lockdown condition, he has conducted at least 3 webinars, which I know, and has done a wonderful job. And I would say he is now also enjoying his fatherhood because recently became a father. So congratulations to him for taking up this initiative. And I hope that these two learned speakers will be able not only to deliver, but I would say will be able to reach to the zenith of the knowledge of stock market. Thank you, friends.
Thank you so much, sir. I would now like to introduce our guest speakers for today's webinar, Chakravati sir and Shri B.M. Khaja Mohideen. Working with SEBI since 2002, Shri Chakravati sir currently holds the position of General Manager in charge of Compliance and Monitoring Division, CMD, of Corporate Finance Department. He holds a Master's in Business Administration. He handled various important assignments at SEBI, and his stint at SEBI includes positions held at Surveillance Department, Market Regulation Department, etc. Shri B.M. Khaja Mohideen is the Assistant Vice President of Metropolitan Stock Exchange. He has obtained various certificates on currency derivatives, equity derivatives, etc. from Securities and Exchange Board of India. He has completed capital market training program conducted by Securities and Exchange Board of India and USAID, along with international training program on capital market conducted by SAFE. He has a wide range of working experience in banks, handling customer service center, compliance division, etc. Further, he is actively involved in investor awareness programs for students and other stakeholders of society. We are certainly fortunate to have you both with us for this webinar. We thank you for accepting our invitation and gracing this session. The Pan India webinar has been specially organized to understand COVID-19 and its impacts on capital market. Now, I would like to request our esteemed panelists to take it forward from here on.
So thank you, Ashna. Thanks for this generous introduction. Thank you all the colleges and the MSc for their participation in this thing. And as rightly pointed out in the opening remarks, despite the lockdown, there seems to be people are unlocking themselves to try and understand the positive impacts of the market. And more so, in this kind of the scenario, I would specifically want to thank MSc to provide this platform to speak on behalf of SEBI. I thank you all for giving this opportunity. So I had culled out some information which has been put out in a slide. So I think that would be useful. And I would want to say that I would prefer the session to be as interactive as possible. In case if you have any doubts in between, you are free to stop me. But I would want to continue with this presentation. So just give me a moment. I'm sharing the screen. So this is how we have structured this flow of the presentation for today's meeting. So we'll be briefly touching on the topics related to the Indian economy and the securities market, and specifically about the Indian securities market, and what is the mandate of the SEBI in terms of the protection of the investors and the reforms measures that needs to be carried out, and the recent investor protection measures taken by SEBI. And additionally, we'll be touching on do's and don'ts of investing in the securities market, and the important aspect of the grievance redressal, especially about the scores, how that has been instituted and what are the provisions available for the investors in case if they have grievances remain unresolved, and the help desk and information center of the SEBI, and the impact of the COVID. So what steps SEBI has taken to try and see that it eases out the compliance burden of the companies, and the advice to the investor lastly. So it's a brief snapshot of what the Indian economy and the securities market look like. You all would be knowing that India is the fastest growing economy in the world. In terms of the developing market, it is the fastest growing economy in the world. And this is expected to be in the top 5 in the next 10 to 15 years. And the government efforts, and in fact, even the regulatory bodies and the other agencies involved in this process are trying to aim at an economy of the 5 trillion by 2024. So in this thing, we should have institutions which would be able to support this kind of an economy. And I'm pretty hopeful that with the SEBI and other regulators in place, we are poised to see such a growth, provided that we all should work hard and try and achieve this target. So for this, we will be requiring some well-functioning securities market. So SEBI has taken many measures in the past and even still continues to take measures to augment the growth of the securities market. So SEBI is acting as a catalyst in the economic growth. It also helps, that various functions of the SEBI include raising of the capital by the corporates in terms of the investing. This is the basically broader, the operations of the SEBI includes the primary market as well as the secondary market. So the primary market concerns to the fundraising and the capital restructuring and the compliances and other requirements of the corporates. So this is majorly with relating to the fundraising activities that caters to the primary market space. And in addition to which, we also have a secondary market, which helps in transacting with the securities which have been subscribed in the primary market. So if an investor happens to subscribe in the primary market, so then he should not be compelled to hold on the security till the time the company exists. So probably he should be given an opportunity to try and exit as and when his need demands. So this is where the secondary market plays also a vital role, and this is actually counterfeiting. So this primary market and secondary market goes hand in hand. And the secondary market major components includes your stock market, the exchanges, the brokers, the depository participants. So all these intermediaries comes under the secondary market. This is basically where you buy and sell the securities. So SEBI measures includes development of both primary market as well as the secondary market. So in terms of understanding how the measures have translated into action, you can see that there is a substantial increase of the market capitalization to the extent of 87%. And almost BSE also, the prices would vary depending upon the number of the scrips in both the exchanges. So BSE has a larger number of scrips, and the price and the market capitalization would be slightly different. So it is almost in the region of 85% plus. That is 87% for NSE and around 84% for BSE. And the important point to note over here is the base on which this happens to grow. Despite from having 60 lakh crores, it went up to 112 lakh crores. So the base on which it is increasing and the rate at which is increasing is phenomenal. And the same gets reflected in the number of the demat accounts also. So the demat accounts, though we see that there is 220% increase in the CDSL, but the base seems to be a little bit on the lower side. But if you see the total number of the accounts which exist around this year, this is around 197 lakh in NSDL and 211 lakh accounts in CDSL. So this complemented with, this is actually reflecting in every space which the security market exists. Like even if you take the case of the mutual funds also, the AUM stands for assets under management. So that moves from around 262% increase. That is on the base of around 6,14,000 crores. The folio wise also, if you see, there is an increase of around 87%. This is almost similar to what we had seen, the increase in the demat accounts. Demat accounts are also in the region of 86% increase. So this all shows that, in a sense, it all shows that the interest that is being shown by the investor in the success story of the Indian securities market. And this is getting reflected in every parameter which is being measured. So now, if you move to what exactly is SEBI and what are the key mandates of the SEBI, and this has been promulgated as part of the mandate of SEBI itself in the Act itself, the three parameters which SEBI has to necessarily look into are the interest of investors. They had to ensure the protection of interest of investors in the securities market. Not only that, they had to ensure the development of the securities market and regulate the securities market. So if you see in isolation, these three parameters seems to be in conflict with each other. So in terms of the development of the securities market, you had to ensure that some relaxation has to be provided in terms of the development, because initially the more hindrances you place in terms of keeping in mind the regulation as well as the protection of the investor, it will dilute the entrepreneurial aspect of the securities market, and it wouldn't help in the promotion of the securities market. So in a way, we had to ensure that the new products get introduced in the market. At the same time, we had to give enough of time for the market to imbibe the new products. and try and explore how these new products would be beneficial for the securities market in the long run. At the same time, we had to balance it out. The interests of the investors are not getting compromised. And similarly, this is being done by way of the regulating in the securities market in an impartial and in a more stringent way. Like, so we need to see that whatever the rule that exists, whatever the law that we make, that is there to protect the interest of the investors. So there is actually a difficult job for the SEBI to try and balance out these mandates. But these mandates are very essential. If you see the larger picture, are very essential for the development of the securities market. So in line with the mandate, SEBI has done major work in terms of improving the market design and regulation. And the people who had traded in the 90s would really appreciate the way the progress has been made in this space. And the people who are traded in the market with the physical paper and the issues of the bad delivery and the good delivery, good paper, bad paper, and other things, the way we moved on to the dematerialization, how the things have improved and how the things have helped in better recognition of the securities market world over. This speaks volumes about the contribution of the SEBI and the efforts that are taken by the SEBI to ensure that Indian securities market remains top-notch and it is comparable to all the markets worldwide. So these kind of measures which are taken by the SEBI helps in increasing the efficiency and transparency in the market. And also SEBI is very keen on introducing new products. As and when if it says that there is an opportunity for the new products, be it cash market products or the derivatives or the mutual funds or the alternative investment funds, REITs and InvITs, any kind of the new products and the securities products as well. So any kind of new products, SEBI is keen to work on it and try and see how best these new products help in development of the market and reduce the market volatility. And one of the new products, in line with the new products also, if you can see that there are some new products introduced in terms of gauging the market volatility, the product relating to the VIX and other things in addition to the indexes what we have. So as we touched upon the primary market and the securities market initially, the broader distinction, how the funds are getting raised through the primary market, SEBI has taken various measures in terms of the strengthening of the primary market also. So these are ensured in terms of complying with the larger mandate of protecting the investors' interest of investors. So there we had mandated that the proceeds has to be kept in a separate account. And our intent is to try and see that it reduces the chances of misutilization. And here we had also mandated that a monitoring agency should be appointed. So any company which actually collects funds for more than 100 crores from the public, they are mandated to have a monitoring agency. So monitoring agency normally are scheduled commercial banks who are assigned the task of trying and see like whether the funds which have been mobilized from the public have been used for the purposes it is being stated as part of the prospectus at the time of the fundraising. So in case of a discrepancy, it has to be brought to the notice of the exchanges and the regulator, and corrective actions would be taken. So the monitoring agency also plays very important role, which was there for the funds raised over 250 crores previously has been brought down to 100 crores. So almost it actually helps in increasing the base of the company which gets covered under this provision. So the monitoring agency report has to be disclosed on the companies and the stock exchanges website also. It is available for public dissemination. So this, if you see that largely SEBI's directions and regulations are aimed at ensuring that there is a transparency in the market. Many of these measures which the SEBI takes are aimed at having a proper disclosure mechanism in place. So our intent is to try and see that information is available to the investors, as information relevant, accurate and appropriate information in a timely manner is available to the investors to take a reasonable call whether to stay invested in the company or to move on to any other products which offer them a better return, as well as they're comfortable in terms of the risk management of those companies. So for this, the basis would be the disclosure aspects, and SEBI places significant reliance on the disclosures of the company. And this is where every minute aspect of the company's functioning has to be disclosed on the stock exchange website. And the stock exchanges, being the first level regulators, are tasked with the mandate of monitoring them. And in case of any discrepancy, appropriate action has to be initiated against those companies. So, and added to that, in the public issues space also, we had come out with the ASBA, application supported by blocked amount. The aspect which I want to highlight over here is previously when the people were applying under the IPO, the funds used to get blocked for months altogether. They used to apply and they are not sure how many shares would get allotted. And the amount over and above the shares that is being getting, over and above the shares being allotted are getting blocked for months altogether. So instead, the SEBI has come up with this initiative wherein the entire amount would not be transferred to the escrow account of the company till the times that the shares have been allotted. Your amount will stay in your account and it would be in a frozen state. And the moment the shares have been allotted and the intimation goes to your banker, the amount that is in proportion to the shares allotted would be released and subsequent amount would remain in your account. The beauty of this is like even the interest that gets accumulated during the process, the investor would gain from the interest that is getting accumulated. The investor is not even losing on the interest portion. So the inefficiencies associated with the previous system has been addressed with the introduction of the ASPA. And SEBI has not stopped with the ASPA. SEBI is trying to implement with the UPI. UPI is a new initiative which the SEBI is taking, wherein the time period for listing of the securities would be reduced considerably, which used to be almost around a month previously, has been brought down significantly to a fortnight, and we are moving to a period, we are targeting a period of T+6, and eventually we want to reduce even that period as well. So if UPI, which has been implemented, if it has been successful, it helps significantly in reduction of the timelines. The important part over here is the moment the shares have been allotted and the period before which they can get listed, there is a lot of vacuum in terms of the information that is available to the market. So we would want to reduce on the volatility of the script during this period. So the faster this happens, the closure of the security, the closure of the allotment, as well as the listing on the exchanges, the time gap between these two should be the minimal to the extent possible. So the UPI would help in reducing, will help in achieving this objective. So this is in terms of the primary market. In terms of the secondary market also, see, the point which I want to stress over here is these are not the only measures which the SEBI has taken. I had picked up only the very basic, minimal and substantive measures, the changes which the SEBI has brought in both the spaces, so that it gives us a bird's eye view of what exactly SEBI has made the changes in terms of the securities market. There are pretty more changes and which are very detailed and minute changes also, where the people who are associated with the operations of this market would better appreciate. In terms of the larger curve, to try and understand the broader picture of the securities market, I'm touching upon the very important changes which have been brought in. So even in the securities market space, the important changes which have been touched upon is our mandate to ensure that the transfer of the securities happen only in demat spaces. So what we had seen is as part of the Depositories Act also, investors have an option to hold the securities in physical as well as in the demat mode. So so the investor has an option to choose whether they want to go for the dematerialization or they want to hold the securities in the physical mode. But however, we had seen that there are some instances where it has been prompted that the physical space has been misutilized. So we are trying to reduce those areas where there are concerns, where the physical securities can be used as a means of manipulation. In terms of, if I had to say, in terms of the market manipulation, this being used as a space for allowing the manipulation to grow. So we had brought in a change where we said the transfer of the security should also happen in the demat mode. Having said that, it doesn't take away the right of the investor to hold the securities in the physical mode. In case, despite this, if the investor wants to hold the securities in physical mode, he is obligated to obtain, he is well within his rights, and the companies are obligated to provide the physical securities to him. But the difficulty is he would not be able to transact on the market, and even the off-market transfer also he has to do it in a demat mode only. So this we presume that it would help significantly in reducing the abuses in the physical holding of the physical securities, and the transparency in the broker-client dealings. So here also, I hope that many people would have read in the papers also how the brokers would end up using the client securities for their own personal purposes. So there SEBI has rules in the past also, which have been made more stringent, where we say that separate bank accounts and demat accounts has to be maintained for clients' funds and securities. Where previously it used to be that proper demarcation has to be there. Now it has been mandated that it has to be a separate account altogether, which there is no possibility of the commingling of the securities of the funds of the brokers as well as the clients. In addition to which, SEBI also said that the SMS and email alerts should go to the investors in terms of the trade. So this would help the investor to try and see that whether any unauthorized trading is happening on their accounts. And having said that, once we are mandating that everything has to in the demat mode, the other aspect which occurs to our mind is in terms of the cost factor. So whether we are pushing the people to try and make it more costly affair for the people to invest in the market. So in terms of the representation and the discussions which the SEBI has with the market participants also, we had introduced a special purpose demat account, which is called as a basic service demat account, where the charges would be nil to the extent where the holding of the securities are less than 50,000. And if up to 2 lakhs, it is a bare minimum of 100 rupees per year. So over and above, that is depending on the depository participants, and the depository participant charges are also, it has to be out in the open. This has to be properly communicated to the investors well before what are the charges that they will be charged for. And this helps in ensuring that the transparency exists in the market. So though the demat has been made mandatory, with the BSTA and other facilities in place, it would be cost effective for the investors as well. So in addition to the misuse, what we had seen in case of the broker client dealing of the securities and fund, we had even mandated that there has to be telephone recording of all the calls made by the clients. And especially if the call is relating to the placement of the orders. So this would, to a larger extent, will minimize the misuse, whether if there is in cases of the unauthorized trading, it would help in a better audit trail, whether that the call has been made by the client directly in terms of the trading in the market, or it is being done by the broker. So this helps in a better audit trail and try and see that that ensures the confidence, that builds up the confidence for the investor to transact in the market space. So in addition to which, the KYC, which is the basic document to identify the client, the KYC stands for know your customer, know your client. So that is an electronic KYC authentication, and that is being made available for all the resident investors. So I think I am taking pretty long time. I would try and script to as early as possible in the positive, in the interest of time. So these are the measures which we have taken in terms of the mutual fund space also. So mutual funds, we all know that there are 4 categories of the mutual funds, largely in terms of the way they invest in the market, like whether some of the mutual funds which invest exclusively in the equity, that is termed as an equity mutual funds, which have predominantly debt investment, is called as a debt mutual fund, debt schemes basically, and a mix of equity and debt, which is called as a hybrid schemes. And we have other schemes also, like in case we would be knowing, like the people who would be interested in trading of the gold, there is some schemes called as a gold ETF, that is an exchange traded funds. So the mutual funds which trade in those kind of schemes, which would get covered under the 4th category, which is under the other type of the schemes. That is not an equity altogether as such, which is an asset which tracks the movement of the gold. So that is called as a gold ETF. So in terms of helping the investor also to try and identify how exactly the performance of the mutual fund and what is the risk level of the mutual fund, we had introduced a concept called as a riskometer, which spans from the low category to high category of identification of the risk. Low category are where we see that the principal is at a very low risk, and moderately low, it would be the principal. Basically, you had to link it up with the principal and the risk appetite. It ranges from the low to the high. If it is low, the principal, the chances of losing out the principal are quite minimal. If it is high, there is a high chance of losing out the principal. So this is depending on the performance of the mutual fund and various other parameters that been looked into. And this broadly gives a kind of a bird's eye view for the investor to try and see whether that is suiting to his risk appetite. So in terms of the risk appetite as well as the return which is being provided by the mutual funds, then investors can take a call. So then in mutual fund space also, we had come up with several other initiatives wherein that would ease out the way the investments can happen. So we see that there is so a lot of demand for the e-wallets also, and people are very comfortable using the e-wallet. So SEBI has allowed investment through the e-wallets. And having said that, see the way the SEBI progresses. SEBI wouldn't immediately open up the gates altogether. So in a calibrated way, it's try and ascertain whether these kind of new products or new initiative with the SEBI takes over are being appreciated by the market, or at the same time, they have the ability to try and minimize the risk that is associated with the instrument. So in terms of the e-wallets also, as a precautionary measure, the amount has been capped at 50,000 per mutual fund per investor in any year. So SEBI, after seeing the success in these spaces also, it is always open to review, and it normally does in every space. And I'm hopeful that in e-wallet space also, it depending on the success in the mutual funds through this route, the limits would also be increased subsequently. So similarly, there is an instant access facility wherein the investors, where they want to redeem the securities, the credit has to happen on the same day when the redemption is being done. And this normally is linked to the market trading hours also, that whether the redemption request, if it has happened to be placed before the market redemption, the credit happens on the same day, or the request, if it happens after the closure of the market hours, the credit would happen on the subsequent day, and then NAV of the next day would be applicable. And the performance disclosure of the mutual fund schemes, the performance disclosure along with the riskometer gives a holistic picture for the investor to try and ascertain whether it is fitting into the risk profile of the investors, and accordingly the investors are liberty to choose the mutual funds as per their convenience. And this mutual fund schemes also, as like the client broker thing, they have a segregated portfolio wherein some of the instruments where the mutual funds have invested in, if they are not performing out, they have declared kind of a defaulter kind of a thing, they can be moved into the segregated portfolio. So invest in mutual fund in the name of the minor is also allowed through their guardian. And the transmission of the mutual funds through the nomination and other facility also will help in proper easing of the process of the transmission. So this is largely the do's and don'ts, which is very self-explanatory. Like I would just read it out. So then the do's and don'ts of investing in the securities market: make sure to receive funds and securities in your account within 1 day of the payout day. So normally whatever the payout date, the T+2, within 1 day that has to happen. The securities as well as the funds pay in has to happen in the state. And everyone has to be careful at the time of opening of the POA, power of attorney, which would definitely ease out the burden of transacting in the market. But at the same time, it is fraught with some of the misuses and the risk associated with executing the POA. And everyone has to remember that the POA is not a mandatory document. The POA is up to the investors to choose in case if it is helping them in terms of easing out their ability to transact in the market, then only with greater precaution they have to execute the POA. Otherwise, it is advisable that investors take enough of care and precaution to try and see that they monitor their trading as well as the demat account on a regular basis. That would reduce the chances of the misuse or unauthorized trading in their accounts. And ensure that the contracts notes have been signed, are received within 24 hours of your trade. And in relation to this, there is a facility which is available on the stock exchanges platform also. By entering this key numbers, then you will be able to see whether the trade has been actually executed on the market space or not. So this, along with the contract notes, also helps in seeing that this unauthorized trading has been reduced to the extent possible. And the investor also has to ensure that they receive statement of account at least once in a quarter from the stockbroker. And they can try and compare with their statement internally, whatever the method of compilation, what they have in terms of their documents in the Word or the Excel, whatever they have, they try and see that they compare with the statement that they received from the repositories or the broker or the DP, and see that no unauthorized trading happens on their account. And if they happen to see that there is an unauthorized trading, it has to be flagged off to the stock exchanges as well as the regulator to see that appropriate action has been taken against the errant brokers. So in terms of the securities as well as the funds also, where there is a chances of the misuse, it can be reduced by keeping a tab on the money which has been there in the broking account. So investors has to see that they don't keep excess of the money in the broking account unless they are interested in taking a position and buying a script. So they should try and avoid keeping excess money in the broking account. And more importantly, you have to understand that the broking account doesn't earn any interest. Unless you are serious about investing in the market, you had to keep the money to the extent as minimal as possible. And the stock exchange stockbroker should not produce securities to raise fund, and you should not keep your signed delivery instruction slip. So this is relating to the demat account. So demat account, just like your bank account and the checkbook, I'm sure that nobody would like to keep their signed checks or probably try and give away the signed checks to any of the stranger. The same is the case with the delivery instruction slips. The delivery instruction slip has the ability to transact your securities from the demat account. So you have to be very careful in terms of dealing with the delivery instruction slip and signing it over. So it's always better that it is in the right spirit and the right earners, that investors keep a tab on all these sensitive instruments and try and see that it is being prone to misuse. So the delivery instructions, if it is being signed, it has to be for a specific purpose and it has to be for a paying instruction. And unsigned delivery instruction should not be left unattended with the DP or a broker. So regularly verify balances with the funds and securities in the account. And more importantly, you had to keep your mobile number or as well as an email ID updated with your broker and the DP. And some of the cases where you would be opening a particular account, opening a dedicated accounts with the depositories directly, there also you should try and ensure that your SMS and your mobile number and the email ID has been updated, so that it would facilitate in trying and sending you the alerts. Like the SMS alerts and email alerts would be sent on those IDs which you had provided at all these places. So then getting into the important aspects of the scores. So despite having gone through the do's and don'ts and the measures and the safeguards which the SEBI has taken, there is every possibility that your transaction might end up into some sort of litigation and you are compelled to escalate some grievances. So in all probability, it is expected that the intermediaries registered with SEBI or those associated with the securities market and the stock exchanges are proactive enough and try and resolve your grievances. So as a first level regulator, normally the stock exchanges takes all the steps to ensure that your grievance has been reduced, redress to your satisfaction. In case the grievance remains unredressed, SEBI alternative has provided a scores platform. The scores is an abbreviated word which an expanded thing stands for SEBI Complaints Redressal System, which is launched in 8th June 2011. So there it helps in investor-friendly centralized web complaints redressal system. Investor can simply create an login ID. He can post his complaint with the supporting documents. It would be taken up, and the way the complaint has been handled even within internally and getting transferred to the stock exchanges as well as the company, and the responses of the company are being transparently available on the system, and that is for the investors to get to see that. So this is available on this website, scores.gov.in, and I request every one of you to keep a note of it, just in case if it comes to this stage where you have to lodge a complaint, this comes in very handy. And this is available on the mobile apps, both in the iOS as well as the Android platform. So these complaints can be filed against all the intermediaries which are registered with SEBI, like the stockbrokers, stock exchanges, depository participant, RTA, so the merchant bankers. So basically, all the intermediaries associated in the secondary market space as the primary market space, everyone is getting covered in this thing, including the listed companies. The people who are raising funds from the public are also getting included in this thing. So it covers almost every area of concern which the investor could possibly have. So in addition to the scores, SEBI also have these helpline numbers. This also, I think, the people, it would come in handy. People should make a note of it. And along with the Ask SEBI for normal assistance. And in addition to which, we have local offices in various state capitals, which would also facilitate in grievance redressal. So in the other related topic of this, the COVID impact on the Indian capital markets, we had seen that it's almost, it left no stone unturned, basically, if you want to say, that it has impacted every possible institution and every possible activity, and it has brought down to the knees of the entire economy. Having said that, SEBI is mindful of the constraints which has been placed by the COVID and the difficulties which the companies as well as the investors has to face in this scenario. So then SEBI has came up with several measures to try and ease out the burden. So anyway, this in terms of the impact also, we see that there is a supply side disruption as well as the demand side disruption, which would affect the global as well as the domestic demand and supply. And in fact, it would many of these companies as well as the research analysts and the people who are associated in the securities market are expecting the lower growth estimate for the world in general and in economy as particular. So this is getting reflected in the way the indices have been moved of late. If you see that Sensex has fell by nearly 20%. So as latest as till May 22nd, from March 2nd to May 22nd, there is a drop of nearly 20%. So in a sense, if you see that the investors who are prudent enough would see this as an opportunity to try and invest in this space. Having said that, with greater disruption of the COVID and its impact on the Indian capital markets and the world economy, it is expected that the market might not bounce back immediately, in all probability. But this is very premature to comment upon which way the market would progress. But if we go rationally with the estimates that is coming up world over, then we see that the market might take substantial time to recover from these losses. But the 20% decline from the markets is a very good starting point for the investors who are looking for the securities market as an asset class in the long term. For them to, it's a right opportunity for them to step in. So there are various measures, as we just touched upon. There are various measures taken by the government as well as the SEBI to minimize the impact of the COVID. So there are, in terms of the government also, we all would be aware that the stimulus packages which are announced by the government, the monetary and fiscal stimulus packages which are announced by the government is largely expected that it would play a significant catalytic role in terms of helping revive the Indian economy. And similarly, this would have a kind of positive cascading effect on the securities market as well. And SEBI also has been mindful of the restraints which has been on the companies as well as the investors to ensure compliances during this period. So it has simplified and relaxed various regulatory requirements. In some of the important document which any investors would be looking for the company is the periodic reports, the annual reports or the quarterly filings, which the companies has to file regularly on the stock exchange platform. All these filings, the due date for filings has been extended, considering the COVID. So these, wherever possible, SEBI has also intervened and try and implemented or come up with some kind of relaxation which would help the companies to cope up with the unprecedented events, and at the same time to balance out that the companies do come up with relevant guidance and estimates and probably the updates as to the impact of the COVID also. So if we see that there is, though there is a relaxation in terms of the filing of the annual reports as well as the financial results by almost a month and 45 days in different cases, Like, at the same time, those significant material events which are getting covered as part of the SEBI LODR, the companies are required to provide regular updates on the function. Like, just in case if the company feels that there is a significant impact on their operations and their operations are getting disrupted, and there is likely to have a negative impact on the profitability of the company, they are obligated to come up regular updates to see that the investor community is not kept in the dark. So there has to be balance that needs to be worked out. At the same time, you have to give due consideration to the company. At the same time, the investor protection also has to be taken in the right spirit. So this relaxed and extended timeline for disclosures which SEBI has done, along with the other attendant measures, SEBI is hopeful that it would try and create a balance, at the same time help those companies and investors in the difficult period of the COVID, to see that the economy bounces back as early as possible. So this is lastly the advice to the investors. The investors has to be aware of their rights and responsibilities. And this goes without saying that the decision has to be as an informed one. It has to be done after taking into consideration the due diligence, and they should not be an impulsive buying and the panic selling. So whenever they see that the stock price is moving up significantly, or it is hitting the upper circuit, then the people has to be really cautious. They have to do their due diligence, and if they are convinced of the parameters behind it or the fundamentals, whether the script has been in the right spirit, is moving in the right direction, then only they has to be cautious enough in terms of the investing. At the same time, in terms of the market rumors and other things which get spread across any of the companies, people should not end up pressing the panic button and start selling the securities. They should exercise the restraint, and they should evaluate the pros and cons of staying invested in the company, and accordingly take an informed decision whether it is actually right or in the best interest of the investors to stay invested in the company or to exit. And more importantly, people should be mindful of those unrelenting SMSs which we are all, in fact, including us also, which has been targeted regularly. We should be very mindful of whatever the SMSs that keep coming in. We should not kind of invest or sell the securities, sell the securities in the guise of the SMSs that is being sent across, and instead they should take it as an opportunity to try and reevaluate the portfolio, the kind of the securities they have, and accordingly take an informed decision. And it is also advised that investors should only deal with registered intermediaries, and there has to be caution and restraint exercised against unsolicited investment tips, and which has been transmitted through the SMSs and emails. People have to be very careful in dealing with them. So we should all be hopeful that like all the disaster, we are the people world over, including in India and the capital markets and all the institutions, we are all hoping that like all the crises before, this also shall pass. And this is definitely a challenging time for the economy, but as we had discussed, there is enough of opportunity for the Indian economy to grow. So investors should be cautious enough to try and see that they take informed decisions and try and make use of the kind of the correction that is happening in the market. Okay, thank you all for giving me a patient listening, and at the same time, I thank you, the MSc and the college and everyone, like for giving an opportunity to share my thoughts with you. Thank you all.
Thank you so much for such an informative and insightful session, sir. We will now have the Q&A. We will have the Q&A after the second session. Now I'd like to introduce Dr. Ashish Jani, BBI Coordinator, MMK College. I would also like to introduce the second speaker for today's webinar, Shri B.M. Khaja Mohideen. Shri B.M. Khaja Mohideen is the Assistant Vice President of Metropolitan Stock Exchange. He has obtained various certificates on currency derivatives, equity derivatives, etc. from Securities and Exchange Board of India. He has completed capital market training conducted by Securities and Exchange Board of India and USAID, along with international training program on capital market conducted by SAFE. He has a wide range of working experience in banks, handling customer service center, compliance division, etc. Further, he is actively involved in investor awareness programs for students and other stakeholders of the society. We are certainly fortunate to have you, sir, for this webinar. And now I would like to request you to take it forward from here on.
Thank you.
Hello.
Hello. Yeah, Ashish sir.
Yeah. But before we proceed for the second session, let me just thank all the participants on behalf of Srimati Mithibai Motiram Kundanani College, Department of Banking and Insurance. Thank you, Chakravati sir, for giving practical inputs to our young investors. And now we'll have the second speaker, as Ashna introduced that, Mr. Mohideen, to take it further, the second session on investors protection as well as on the financial market and stock market. Over to you, sir.
Thank you. The slide is visible. Hello.
Yes, sir.
Okay. Okay, right. Thank you. Good morning, everybody. First of all, I would like to thank the Mr. Chakravati, GM SEBI, in their busy schedule, given their appointment, and then joined in the panel of the speaker. I would like to thank him, and then I would like to thank the college officials and the students, everyone. Thank you very much. Let's start. Before starting, this is the requirement of the topic at this juncture. Actually, everyone is having a fear, and we don't know how the market will go, and then what is our lifestyle. Because earlier there was always the word was there: cooperation, coordination, jointly, assemble, like that the word. Now we can see everywhere it is the social distance, suppression, isolation, all these words has come. We are thinking of only the disease point of view, and the disease, how it is affected in the business, how it is affected the monetary of the each individual, and what is the status of the economy, that some group of people is not able to understand what is happening. So this is very important session for everyone. Actually, in this situation, the slogan is, this is the important slogan. You can see that instead of ease of doing business, we should do please of doing business, because situation is required that. Now, because comfort is not important, but something we need to do to earn something. In that situation, it is not only for the small businessman, from the small business to the bigger way, everyone is required this slogan. Next one is, you can see that this is the impact happened. This is so many things happen. We are, see, people, students or normal people, we all think of that, sir, when we are asking them what impact you have got it, then the immediate, hello, is it okay? What impact is happened in this situation? People are telling that, no, we are not able to go to the shopping, we are not able to go to the cinema. Like that only people thinking not able to go to the this one friend's house, like that. But how the economy got affected? That is the total Indian economy and the industry totally affected. We cannot reject that. We will have to accept it. And second thing is the collapse also, not slowly, it is the very speed. It is totally collapsed. And then uncertainty in the global economy, in the not only Indian economy, it's in the global economy. Uncertainty is prevalent everywhere. And then in the investor's mind, confusion, fear, whether we will invest now or we will invest later, or we will sell it now only, whether we'll keep it long term or short term. Every confusion is prevailing now. And then the international business, totally collapsed. And then the FIs selling pressure more and more. People, even in the March, April, there was a lot of pressure, FI sellings. You see that before this COVID, March before, you see that the February, there was a budget announcement. There was a lot of tax benefits given to the industries, fund allotment to the infrastructure development, tax benefit to the taxpayer and individuals and corporates, and more savings schemes was announced, and then relaxation for the corporate for the dividend distribution tax, and the fund allotment for the various core sectors. Everything was announced in the budget. People thought that, okay, everything will be 100%. It is sure that the economy will grow, and whatever that we are expected, the percentage that will go beyond that, like that, and all the expectation was there in February. But after that, you are seeing it. See, when the Sensex movement, it was February, it was beginning, it was 40,000 mark. And then end of the month, it came down to the 38,000. But if you are seeing it in the March end, 29,000 mark. So drastically came down. Even one point of time in January 16, if I am not wrong, actually 16th of January, it went to even 42,000 mark. And then now in March, it came to 29,000, nearly 11,000, 12,000 mark is gone because of that. Because of this lockdown, COVID, everything, it is considered. The market has considered like that. They have a fear, not only FIs, FPIs, everyone is having a fear on that. What is their investment? What will be the status of the investment? You see that yesterday, day before yesterday, the market, there was some plus a point was there. Even in Thursday, the derivatives contract expiry date was there. More the bank stock was traded, and then there was a good something. It was happened. People thought that okay, it went to the level of 26,000 and went to the upper level of 42,000. They thought that we are in the middle now. Okay, we can enter it like that. Their feel is we can enter now. At least middle level, it goes below also. Again, it will go to that 30,000 marks. It go upper, at least we will have it 35,000 mark, 36,000 mark. Like that, they're thinking. That's what in April, there was a good trading volume, and there was some of the stocks and all, it's flourished like anything. And one thing, since the people are students, the index of the industrial production always concentrate on these 8 sector only, these 8 industries. These 8 industries, coal, crude, natural gas, petroleum refinery, fertilizer, steel, cement, electricity generation. These are the major 46% of the contribution in the economy. See, you can see the chart. Comparing with the March 2019 and March 2020, all the sector, 99% of the sector has decreased only. Totally, it's gone down. You can see that it is 6.5%. Actually, the sector output dips to the level of 6.9%. They are telling that even it is revised now is 9%. Even today it came some data. It says that it is 9%. So these are the major industries contributing weightage. You can see in these industries only major contribution for the economy. And then you can see what happened. Very high level impact on the business. No new IPOs. Mutual fund, Franklin Templeton closes 6 debt schemes. And then actually you can see that even today's paper, it has come. Public interest litigation was filed in the High Court, and they are given some order that is on right now. And they are, even the Franklin Templeton has announced that they wanted to arrange for the e-voting for the monetization of the assets. That is also they are planning it. And then exports and import totally affected, because you see that it is not only the Asia or not only the Europe countries, it is affected the whole world. Global economy totally got affected. So the total export and imports affected. Removal of funds by the FIs, they have a fear. And then commodity, you see that commodity by crude oil, the status is it went to the level of negative figure, minus it is. Now the stock exchange is, because the demand, supply, storage, all these things are, it should be synced one by one. But since there is a more supply, there is no demand. And then storage facilities, it is not available much. So the value has gone down. Even if the value totally gone down and went to the level of minus, then now the exchange is announced for trading in minus figure. Minus trading, it's happening now. That is what? Degrowth in sales 2020-21, yes. You can expect the people, analysts, what they are telling is till June 2021. You cannot expect the drastic movement of the upward side something. It will slowly. Improvement will be there, but it will slow improvement only. And you see each companies, two important things. One is the cash flow, another one is the order book. Now, both are affected. Cash flow also, there is no cash flow, and order book also now it is very less. So it's totally the corporates is affected. Then Goldman see that worst India recession with 45% in the second quarter. It's going to be like that. Even the CRISIL has announced worst recession has got. We are facing the worst recession in India. Not only India, we can say it is the economy is totally. You can see that even some of the international countries, actually US or Australia or France, whoever it is, that is everything is the GDP is in the minus. It is going in the minus level. And then production, no supply, no transportation, delivery, nothing is happening. Power shutdown, manpower problem, everything is we are facing it right now. We are utilizing only 25% of the full capacity of the operating strength. We are not using 100% because of something is rotation basis, all something is shift basis, only limited. Even in general, every office says that each department may 1 or 2% is enough. Not required 100% strength. It is. Even the plant utilization, if you are seeing it, it is all data. If you are seeing that in India, plant utilization, only 10% utilization is happening. Then where is the supply, where is the production will be 100%, we cannot reach it. Then the salary reduction is happening. Some people is 50%, some people is 20%, some is layoff is happening. Even last week, something Uber's layoff, something was happened. All these things, see, this is all temporary because of these issues. These COVID-19 issues, lockdown, it's all happening. So, but you can see that even in the gold level, not only the equity level, in the gold level, demand saw 36%. 36% over the year January to March quarter of this year. It's a level of 101.9 ton. But jewelry demand dropped. Jewelry demand dropped 27% to the level of 27,230 crores. In the quarter, you can see that 41% to 73.9 ton. But ultimately, you see that whatever it's because in gold, in regular return is 11% because the analyst is observed that every year 11% return is happening. 11% return they are getting it. And then RBI, because of this, all these things happen. Okay, the government what initiative done, what the RBI has done, what the SEBI has done, they have not taken so many initiatives. They have taken so many initiatives. Everything. They have, first of all, if you are seeing it, RBI, it is reduced 5.15%. That is, earlier in February, the repo rate was 5.15%. Then in the May, it came down to the level of 4%. Actually, 5.15 to 4%, 1.15%. The last level of 4.4 was there in April. That was reduced to 4.00 now. Then GDP, yes, it is reduced, but they are forecasting that there will be an improvement in the GDP. Then you can see that mutual funds, the government has, RBI has injected 50,000 crore to the bank for the special loan to the mutual funds, because normally every year in the March, the this redemption will come. So people always need a money. The mutual funds will need a money. They will take a loan from the bank like that. But this time what happened? because of this COVID issue. So they need more money because of the value, everything has gone, all this issue is there, more redemption has come, everything is considered. The government has given a special liquidity facility for the mutual funds, 50,000 crores. Then Reserve Bank has decided to, they are conducting it the simultaneous purchase and sale of government securities. Then RBI provided 15,000 crore to SIDBI for stabilizing this MSME. This is very important things was happened. Even the MSME definition also they changed. And then United Nations, as of the latest news, United Nations has forecasted Indian economic growth it was in the January 6.6%. It reduced to the level of 1.2%. But what they are telling is in the next fiscal year, it will go to the level of 5.5%. And then what is the SEBI's actions? SEBI also considered in this situation, they wanted to give some relaxation to the market intermediaries. Market intermediaries, GPs, mutual funds, listed companies, stockbrokers, depositories, everyone they wanted to give some relaxation on this. So they have given a timeline for relaxed for the submission of the documents. They relaxed some online KYC registration facilities was started, and then AGM meeting, it can be done through online also, some relaxation of holding of AGM, and then they are given the 50% of the payment of fees for a specific period, some period that they given, and finally they have extended to the level of some of the compliance, continue compliance, it is should be completed before June 30th, some it may be July 31st, something is there, some circulars they have released, some orders they have released, you can refer it, you can go and refer in the SEBI website. And then government announcement of FDI, this is very important point. Now the government is very much concentration of the foreign direct investments. What is happening, they wanted to see, because of during that period from January to March, during that period, China has raised their stake in the HDFC from 0.8% to 1.01%. Because the problem started from the China only, but during that period, they have invested some level, and then immediately government, not only for that, and immediately government had taken some decision and then intimated to the market, intimated to the corporates, stating that if any changes in the shares because of the foreign direct investments, you should intimate. And then changes in the management or shareholding pattern, whatever it is, you have to get the approval also. Even latest SEBI has allowed beneficial ownership of the foreign portfolio investor. They are China lines basis me, they are asking now this detail also. Because FPI investments in May, you can see that in May, 17,000 crores was investment happened. Then all these things considered, even NASDAQ has tightened the listing norms, which is related to the China companies. IPOs, if they wanted to list it in the exchanges, they have revised the norms, little bit stringent norms, and they have allowed in the NASDAQ. Then only they are allowing it. That came in the policy matters, they have revised now. Now you see that, as I told earlier, in April, there was little bit development, because in the March totally drastically crashed. Total market has crashed. After 15th, particularly after 15th of March, it crashed like anything. All the shares, as Sir said, Securities has said, 20% of the value has gone down everywhere. Some is 20, some is 30. But one thing you keep it in mind. This is all, even the good company shares also came down. Even the financially strong companies' shares value also came down. So some of the good industries value also came down. All this because of this lockdown and COVID. So when you are going to invest, you should consider all these things, because the rating is there. You can see in there, if you are going into the company website, you can see the rating. The CRISIL, all these credit rating agencies are giving. They are giving the rating. But that's what government, or I heard, I learned, I read also, the consideration of the rating for these last 3 months, Karna, it is not a valuable one because of, you see that the situation is bad. If A, the rating was there, if now it is in the C, then because of the financial value, because of the no business promotional activities, because of the power shutdown or whatever it is, because of all this issue it's happening, then we should not consider that. So index also raised at that time in comparative with the May 2009, the good improvements in that particular month, this status it is. Some of the sectors, pharma, gold, energy was improved. Then automobile industries, over a decade, its shares were improved. The banking sectors from March 2019, some improvement was happened. People, as I said, now people thought that, okay, this is a mid-level. Some investment we can do or something we can sell it and come back and we reinvest again later. Like that they thought. Increase in the Sensex, everything was happened. But ultimately the sentiments of the 20 bearish only. They are having a fear. They thought that whether this is the level, the lower level, or it will go further down. So that fear is still there on their mind. So what is the revival package? Revival for total, not only capital market, it is the economy or whatever it is. Government as finance ministers announced 20 lakh crore relief package in 5 tranches. She has announced so many packages which is relevant to the relevant industries, which is the required one, and then the MSME, micro, small, medium enterprises companies, and then on that also now they have revised some clarification on the definition on the which is the minimum that is which is the small, micro, and medium companies. In that way, in micro, if their turnover is 5 crore, if their turnover is I can say custom data. If their turnover is 5 crore and their investment is 1 crore, their consideration is the micro. Then it is the small companies. If their turnover is 50 crores and the investment is 10 crore, then it considered like that. And the definition for the medium companies, they have revised to one more level. Actually, 20 crores earlier they have announced for the investment. Now it is they are thinking of that 50 crores and 200 crores. So all these, and their concentration mainly on the MSME companies, which is more affected. RBI loan facility also, mutual funds MSC through bank and SIDBI was already given. And then one thing very clear, sir, actually this was the analyst report said that after this COVID, this lockdown released, after this all the issues resolved, there might be a big food problem. The crisis may be in the global level. Global level, there may be a food problem. So the exporting of food, that is the industries that is going to be grow very fast. That is the expectation. Exporter demand estimated to be approximately 32% in next year. The exporter is going to gain it. And then even cash and liquidity should be infused. See, our Prime Minister has announced the relaxation of our concentration on 4 areas like law, liquidity, land, law, liquidity, land, and labor. All these 4 L they were referred. They wanted to become India as the self-reliant India. That is their concentrated, because all over world there is a problem. We cannot depend on anybody's also. We cannot wait for the fund from outside also. We will have to grow ourselves now. This is the right time to grow also. And then FII's confidence, to create the FII confidence, that is very important. See, comparatively, the COVID affected and the economy affected, compared with the developed countries, India is only 0.5% only affected. 0.5%, so that the recovery will be faster. Recovery will be fast because we have taken a well advanced initiative to take care of this disease, and then make the people to alert on this, and intimated the corporates to make their cash, everything is ready for the critical situation. The all announcement was there, and subsequently there was a lot of packages was announced to the companies. Everything was happened. One thing, people who are not able to justify the market, able to see that whether this market will go up, or you do one thing, SIP small investments, you invest it, but it is not for a small time, it is at least for 10 years. You start investing it from 500 rupees, whatever it is. And that is what even the market expert, Rakesh Junjunwala, is telling. He is telling also, he is a very experienced person. He is telling that SIP investment is must. Now, then government allowing one more important thing, latest things was happened, private investment in the public companies. That is a very important latest development was happened. Because the fund infused, then automatically the development will start, growth will start, business promotion will start, then the production will also start, and the supply and demand will match. See, all these things, what I informed as till now, it is all what has happened because of the lockdown, and then what are the developments is subsequently happened through the government or by the RBI or by the SEBI. Everybody has initiated some level of development activities. Now, investment in capital market. See, one thing you should be very clear. See, capital market is the place for the people who require the money, the people who are having a money. It is a platform. The SEBI has provided a platform for the people who require the money for any purpose. You can see that for the development, business development, it is for the economy, it is for the promotional activities, everything. And but in other side, it is the fund requirement. For our side, it is, you can see as a savings, you can see as a investment. Anyway, any point of way you can decide it. But you must be very careful because I am telling that, because it is reward and risk attached with the market. Always it is. If anyone is coming and telling that you have a guaranteed return of this much, no. Anyone knows this is because the changes will happen for any reason, anywhere, but the prices will vary, the liquidity may increase or decrease based on the information. You are investing in some companies, particular companies' financial position, you can consider the first one. Management changes, yes, you can consider it. Then the promotional activities, yes, you will have to consider it. Then the history of the dividend and bonus declaration, yes, you will have to consider it. So many things are there. You see this, when it's a wealth creation is an art. Wealth creation, wealth management, presentation and planning. All these things, how it flows, it is from the energy and ideas. It is always flows from the energy and ideas. So wealth creation is, there is a art, I said, there is a process. It is a process. Assess, identify which shares you wanted to buy, like that, design it, implement it. People doing one big mistake is implementing it. After that, they forget. They are not monitoring it at all. Whatever the investment, they don't know. Even some people, old age people, they are investing it, everything they are keeping it. After some times, he forgot. And then his son is coming, and then when he is opening a bureau, somewhere some certificate is lying, all these things, then he has to do for the dematerialization of the shares, everything. Then only he come to know that his father has done some investment. Whenever you are investing it, something like a market or real estate or in gold, you always keep it alert or intimate somebody who are very close to you. That is in your family members. And then you select the product. You wanted to go for the financial product or you wanted to go for the non-financial product. If you are the financial product, equity, mutual fund, like that, you can think of it. Non-financial product, real estate, gold, you can go in that way. And then there is a two type of investors. One investor is the active investor. Another one is a passive investor. Who is the active investor? They are aware of the market. They are aware of the process, how it will go. They are aware of that, how the market will flow. They are aware about the companies directly. Then you can think of it, you can go for the direct investments. But passive investor, they are not aware of that. They don't know about the market. Then they will have to go through some sources. Some sources in the sense I'm talking about the mutual funds. You can go with them. They have analysts, they have a team, they will analyze it, and you will have to select the scheme. Accordingly, you will have to invest it. You see, decision of investment, before entering into that, you are having your money, right? What for you are going to invest in? For buying a house, or for the future children investments, their educations, or for the retirement, or for the insurance policies for the health or medical, or for the savings for their self, that is like a deposit or certificates you wanted to buy it, you can buy and keep it. This deposit and certificate are short term. You can redeem it any time which is required. You wanted to do it for 1 hour, 1 year or 3 years, something, you can put it a certificate and then you can take back. Your deposit, recurring deposit or FD, you can invest it and then you can take back. But long term, you have to think of it. Short term is normally a week to 1 year, and then long term is more than a year. But long term, always it is risk attached. We don't know what's happened now. We don't know that. Anything can happen. But we will have to justify it, whether we can continue it or redeem it, or we can think of it for some time, all these things. So while you are investing it, you raised some questions on you. How much to invest? That is, first, where to invest, when to invest, how to invest, it is the right time to invest or not. That you will have to raise a question. With the various information, you will have to see that. What is the information? If you are having a cash, don't take a loan and investment. That is always you will have to work out in a bigger way, and this is not justifiable also sometimes. Because it is the interest you will have to pay there, and then you will have to consider how many years, that much level of appreciation you will have to get it in this market. So all this confusion will come. Then you select the industry, which is known industries. You are aware of some industries, you go with that industry. And then you consider the growth of that one. Then you consider all ifs and buts, aspects, facts, everything you will have to consider it. When it was grown, when it came down, what for it came down, why it has grown, all these things you will have to consider it. It is available everywhere in the website, all company website, SEBI website, you can see the exchange website. There is private in websites also is there. You can go through, graph is there, everything is there. You select the relevant company shares. One thing, the advisable point is, one thing is, the market expert says that if you are the self-employed or a pensioner or a senior citizen, looking for the high predictability, please don't go for debt segments. Prefer deposits, because there is a categories from 30 to 40 years. 30 to 40 years, you can take a risk. Another 20 years, you can manage it for your job or whatever it is. When 40 to 50, you should be little careful on that, whether we can continue with that, we can take some risk or not, all you will have to justify it. From 50 to 60, don't take risk at all. It is a common advice, don't take risk at all. You put it in the safety investment, keep it in the safety level, and then you can maintain it. Even though the percentage is lesser, no problem. Keep it in the safer level. And then when you are going for any of the company shares, this is only for, I am talking about the company shares. If you are going for any company share, you have to see the track record. Dividend declared, bonus declared, financial strength of the company, any business promotional activities has happened, infrastructure, volume of business, price movement of 52 weeks, you can see that. When it was went down, how much it has went up, what is the current price, whether this is the right time to enter into the market, all these things you have to see. Then all this data, as I said, all this data, it is available by way of government orders, announcement, RBI policies, capital market website, FICI, SIDBI, exchange website, market experts view, everything is there. So all this data was taken and then provided to you. Thank you. But last but not least, I wanted to tell only one word, that if you are investing it, you think twice. If you are a new investor, if you are not aware of the market, go with the SIP. If you are the existing investor, you don't go with the panic. You do give in with sentiments, go with the sentiments, whatever it is happening, and don't go with the pressure particularly. You are seeing it movement, it will go up, come down, go up, come down, we'll sell, buy. It is not a right way. You look into that, see the market. Long term, you will have to wait for some time. It will come back. Whatever happened for the industry, whatever happened for the economy, whatever happened now, it is the all temporary basis. Okay? So you take care, invest safely, invest for your future generation. Thank you very much, sir.
Thank you so much, sir, for such an enlightening session. Sir, we've already started receiving a lot of questions in our chat box. May we begin with the Q&A round? And I also request the others to post their questions in the chat box. And I request Jabran to come online as both of us are going to start with the Q&A round.
Good afternoon, sir. Initially, I'd like to start off by thanking you for such an informative session. Thank you very much. And now to get to the questions. One of the questions that we received is that one of the challenging aspects of this coronavirus outbreak for capital markets is the disclosure of business risk, something that SEBI has worked hard towards ensuring transparency of. So how do you feel that in the long term, what will be the aspects that will impact the degree of disclosure? Because we don't know for sure when this will stop. So to what extent will the degree be manipulated by what factors? So.
Yeah, I'll take that since it is concerning to the SEBI. See, even currently we have factored in a lot many aspects that requires immediate disclosure. So there is a periodic disclosure depending on the aspects of the issue, and there is a material event disclosure. So if someone is aware of this thing, that is forming part of the listing obligations and disclosure requirements, that is called as a SEBI LODR. So where we have a specific requirement exclusively, we say that as and when any material event happens, it mandates a disclosure. So now this kind of an event, which is a COVID kind of an event, which is affecting all the companies all at once, and the manner in which it is affecting is also almost similar across companies. So it almost mandates a disclosure from all the companies taken together. So then the whole aspect is to what extent the disclosure has to happen. If you see on the exchanges website also, be it MSC, NSC, BSC, there are a host of the companies who has come up with the COVID related disclosures. Then the disclosures are most kind of like giving a generic idea of to what extent the impact would be. They would not be in a position to get into the specifics of it. So the bigger challenge over here is, are we really required to mandate the specifics? If you want to say that the company has to come out clearly to what extent the loss would be, if they had to crystallize the losses and say, yes, this would be the amount of the losses, then it's kind of a two-edged weapon. Most likely the companies might recover from the losses. Some sector of the companies might recover from the losses, or probably some other companies might get deeper into the losses as well. So the figure, if we kind of mandate them, the figure which they end up quoting might not be reflective of the reality also. It can be at times misleading. So there is a challenge to this. So it is always better that it is left to the interpretation of the companies in terms of the spirit and the way they want to enhance the transparency and kind of provide the information to the investors to help him take an informed investment decision. It has to be taken into consideration all the other factors over a period of time, and the necessary updates has to happen to the market. So the kind of legal requirement to this and the platform which is already available in the market. So in case if we keep on monitoring the exchanges as well as the SEBI keeps on monitoring the disclosures that come up, in case if really something is really required, some guidance or some tweaking is required, then accordingly those things would be mandated. But as of now, it is for the companies to interpret. It is companies for the companies to interpret. Yeah, tell me please.
Yeah, thank you, sir.
Yeah, this is for the companies to interpret as part of the regulation 30 of the SEBI LODR.
All right. Thank you so much, sir.
So the next question which we're getting is, will the market take a V-shaped curve or a U-shaped curve post-COVID?
See, it's a V shape or U shape, whatever it is. First of all, current levels, we will have to come out of this. That is the important thing. So, whatever the investment, whatever the say U shape, V shape is, say market is always with the U shape, V shape only. And it is, but we'll have to think that the situation, what currently happened, that is what in my explanation also, in the presentation also I said. The current situation, you are considering it, it is not the permanent basis. It may grow because our Sensex went up to 42,000 marks also Sensex. But the growth will be there and it will be the development will also be there. So that, but we can see that it will be a slow development only for some time. Till, as per the expert says that till June 2021, that the promotional activities, everything will be slowed down only. After that, next fiscal year or next year, something, there might be some developments, certain that will be there. We can come back to the normal level after some time, because I said the impact is only 0.5% only in our comparative with the developmental other countries. So if we can recover fast, but it will be slowly we can improve it. That is what going to happen.
Thank you, sir. Now, so another question is that the Chinese government has been actively issuing companies with coronavirus bonds, which offer low coupon rates. And the defaults are lower than expected for at least the time being. So what do you have to say about the implementation of a similar sort of a strategy with reference to India?
Sir, you want to answer? Chakravati, sir?
Yeah.
Please.
No, this, I don't think even the SEBI has any views on this, because the bonds and the stimulus. See, even the government is announcing some stimulus to try and ease out the difficulty of the companies. I'm not sure how this kind of gets to the companies, and bonds is one, could be one possibility that they might reach out to in terms of the low coupon, low interest rates on the bonds and other things. But definitely not, the SEBI would not be getting into this aspect as such. It will be through the RBI, I think, would be the right institution who might be answering on this. But yeah, definitely this is also worth a suggestion, worth looking into.
Okay, thank you, sir. So another question. Approximately how much time will it take for capital markets to revive from COVID-19?
See, revive, actually, as I said the earlier answer, sorry, you are telling something?
No, this is also similar to the earlier response, V shape or U shape curve.
The same response only for this. That's what I said. The revive, you cannot justify it, because who justified this COVID? The market is drastically 12,000 points came down. Who has justified it? No one has justified it. So market is always, even the one word we normally use it. It is anyone is giving a guarantee, no guarantee. In this, whatever the investment in this market, no guarantee. If anyone is coming and telling you, you will get the guaranteed return. No, we will not accept it. That is even SEBI knows, we knows. That is what always in our presentation we say is that there is no guarantee return in the capital market investment. That you keep it in mind. But accordingly, you make it the safety investments. That's all.
Thank you, sir. So another question, this is a little detailed. There has been a significant amount of industry and legal commentary around the relevance of force majeure provisions with regard to a company's obligations. However, sir, because the impact of the COVID-19 epidemic is uncertain, would underwriters want to consider the inclusion of a more explicit force majeure clause or clauses? What do you say?
Would underwriters, in a sense, like we couldn't get it?
So the policymakers, the people who are making the clauses, would they want to consider the inclusion of a more explicit force majeure clause with reference to the pandemic?
A force majeure clause in the sense, like, I'm not getting it. Like, in terms of the relaxations, what you're talking, or?
Yes, sir.
So relaxation, see, largely the relaxation have already been factored in. As was pointed in my presentation, also even in the Khaja's presentation, it is already been detailed out in terms of the periodic disclosure which requires to be made at regular intervals. This has been extended for a considerable period. And this is kind of an open in terms of the, see, now the corona, especially in India, the COVID thing, the measures have become more state specific. Not exactly the center, it has become more state specific. So as and when if there is a difficulty in terms of implementation in those things, I think that with the exchanges, SEBI might work along with the exchanges and try and see that if it warrants any further extension of these things, that would be looked into. But currently, whatever the timelines that has been factored in, they stand up to June 30th. That has been deferred to June 30th. So over and above any further measures that requires to be taken to ease out the difficulty in terms of the compliances, that would definitely be looked. So even in terms of underwriter specification, which you're talking about, underwriter has to do something in terms of the fundraising. If someone is coming with the IPOs, if there is a devolution obligation on terms of the underwriter, then those things might come in, but I'm not very sure whether many companies would be keen on raising the funds in this current market. So if that be there and there are certain hindrances for the underwriters to comply with the requirements, that also would be looked into.
Okay, sir. Sir, another question. What flexibility might regulators grant that would enable traders to work from home? Or what regulators are already granted to the traders?
This is already there. It is the online trading facilities is already available. Even the investor can directly log in and do even through mobile or laptop or whatever it is. This facility is already extended to the people. They don't need to go to the broker office. All these things is not happening nowadays. Earlier there was a big chunk of crowd behind the dealers. They will sit and then they will note it. They will sell. They will buy, like that. They will tell. Now nothing is. Everything is online. You can work from home and they will allot you the one code, UCC code. They will allot you and the password you will have to create it. Even the password certificateness also is there. Every 14 days it will have to change it, like that. And then all information you can download it through that link itself. All whatever the trading you have done, everything over and above, even the brokers are sending you the information of confirmation of your trades by way of mail, SMS, contract note, statement, margin file, everything you are getting it. How much margin was utilized, was it profit or loss today's trade, everything you are getting. You can view it online itself. The provision is already available for the traders.
Just to add to what he said, in addition to these facilities, SEBI also mandated that the calls has to be recorded from the client as well as to the broker. That has to be recorded, especially if the calls concerns to placing of an orders on the market, that has to be necessarily be tracked upon. So that facilitates in the audit trail. As he rightly said, rest of the facilities are already available. In case of the bigger traders also, the direct market access facility is also there, preventing the broker thing. So the only precaution, the caution has to be exercised by the investor to try and see, as he's mentioning about the contract note, there is a way of verifying the contract note which get transmitted through the emails and SMS, even independently verifying on the exchange's website also. And they have to periodically reconcile their trading activity to try and see that there is no unauthorized trading happening.
Thank you, sir. So another question that remains prevalent across time, and that has become even more important right now. Even though diversification remains key, what, according to you, would be the best way to invest for returns during the pandemic? Gold, real estate, fixed deposits, or mutual funds? Just a take on that. Both short term and long term.
So you can say, you can. As a regulator, would like to say something.
The regulator is not supposed to comment on
no comments. That's
preferences of the asset classes as such. See, we have a different types of the asset classes catering to the risk reward potential of the investor. As Khaja has also talked in his presentation, he kind of neatly, succinctly put it across, like the people who are actually self-employed, the pensioners and the senior citizen who are into the bracket of the risk-averse nature, they should prefer deposit. So, likewise, this is one category of investors which he is talking about. Similarly, the people who have a bigger risk appetite, there are various category of asset classes which are available. they had to choose from it. But undoubtedly, having chosen the fixed deposits over and above the equity class, the returns would be lower. At the same time, there is a safety to the investment and the risk would be reduced to that extent. But if you choose an equity, there is a possibility that you would get a higher return. But the risk associated, like in these kind of force major events like the COVID and other things, they had to live with it. So they wouldn't immediately, in case if there is a dying need for liquidity, the other issues, they want to actually sell off their securities in the market also, this might not be the right time. So the people who are wanting to invest into the equity, they should have a greater appetite to hold on to the investment for a considerable time. So likewise, the different asset classes would get preferred by the investor at different points of time. As of today, I would say that many of the people might prefer to invest in gold. Having said that, gold in the long run might not compare with the returns that are offered in the equity market. And the equity market, which are on an average 20% less than what that is being traded, and in fact closer to 40-50% that Khaja has brought down in his presentation, this seems to be a right time to invest in the market. Having said that, if you considering the V-shaped recovery or the U-shaped recovery, the time period might span across. We can't really know. India might recover immediately, but in comparison to the world economies, the economy, since it is being globalized over the years, I think many of those revenues depend on their trading across borders. So might not actually reflect on to the financial statement and the bottom line of the companies. So it might take some time to actually translate into profit and eventual share prices of the company. So they had to have a longer appetite to hold on to the market. Then I'm sure that it would offer a better return.
Thank you so much, sir. I would like to thank both of you for indulging with me, and I request Ashna to take it on from here. Thank you.
Thank you.
Thank you so much, sir. So this brings us to the end of this engrossing and very informative session. I would now like to request Dr. Ashish Jani, BBI Coordinator, MMK College, to give some closing remarks.
Yeah, hello everyone. Finally, we are coming to the last concluding session of today's webinar. I would like to thank each and everyone, those who are directly, indirectly associated for the successful completion of today's webinar. All my participants, students, academicians for making this webinar successful. At the same time, first, I would like to thank our management, principal for giving permission and giving all-time support for conduct of webinar as for all other activities. Our vice principals, at the same time, my other self-finance coordinators and other teacher colleagues to support me in all the current endeavors as well as the future endeavors. Now coming to the speakers, both the speakers, they are the eminent panelists from the regulatory authorities. Chakravati sir, Khaja sir, you have given the real practical inputs to our students as well as to the academicians. I'm sure they are going to use it for all their future teachings, online teaching as well as traditional teaching. Is at the same time, it supports that theoretical foundation. Whatever we are teaching in theory, you have really implemented in a practical sense. Thank you everyone, the technical team as well as everyone from BIAP for wonderful conduct of today's webinar. So finally, I'm going to wind up today's meeting. Is there anything else, Ashna? Over to you.
Yes, sir. Thank you. I would like to express my gratitude towards Shri Chakravati sir and Shri BM Khaja Mohideen sir for taking the time to enlighten us with this extremely helpful session. And I sincerely thank the Department of Banking and Insurance, BBI, of Srimati Mithibai Motiram Kundani College of Commerce and Economics for associating with us for this webinar. We're also thankful for the overwhelming response and active participation from our participants. We certainly hope that this session has been productive for all of you and wish that the knowledge shared with you today helps you in the industry. The link for the feedback form will be shared on the WhatsApp groups. Kindly fill in the same and we will be mailing the e-certificates to you in a week's time. For more such insightful and valuable webinars, check out our YouTube channel, which is BIAP Official. Like, comment, subscribe, and press the bell button for latest updates. And for more details, please contact us at reachus@biap.in. Thank you.
Yeah, thank you.
Thank you. Thank you, sir.